morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. It's a little quiet on the trading floor here this morning as in observance of Columbus Day. The bond pit and the currency pits are closed. It's a little quiet day. But let's talk about what's going on in the equity markets. Okay, last week we talked about on October 2nd we got a follow-through day, so the market staged a new rally in equities, and pretty much so it's holding up quite well. In fact, a lot of things have been improving in the market. Most specifically is the market breadth. I mean, there's a lot of participation in this market. So if we just take a look at the number of stocks above their 50-day moving average, it was at the 15% level when the market went into correction, and now we have 60% of the NYSE stocks above their 50-day moving average. That's a big dramatic change, and that's very important. Now, if we look at the number of stocks above their 200-day moving average, that could still use a little bit of improvement. But still, it came off from being as low as 15%. Now we're at 30% above its 200-day moving average. So if we see a little bit more improvement, that'll be very good. Another really great thing is we see the Dow transports are bouncing off the bottom. Now, the transports have pretty much been in a downtrend since last November. It's almost a year. They've been sort of the one divergent factor that's been going on in the equity markets, been in a downtrend, and now we're seeing that bounce and leading the bounce for equities, and that's really constructive too for the market. We saw materials and energy, which was the most beat up sectors out there. They're bouncing off the bottom. In fact, they were pretty much accounted for a lot of the gains the S&P made. We still have problems in the biotech sector. That may be the key to see the NASDAQ recover. The healthcare and biotechs are pretty much turned into the lagging sector, which was the leading sector coming into this correction. So that's something to keep your eye on. Now, if we look at the levels, the S&P 500 got above the 2,000 level, and that's a really important level. And we're going to see it's going to test that 2040 level. That was a big support level for the whole year, and of course, it broke down through that. So we'd like to see the S&P get above that 2040 level. And then we say, hey, maybe this rally really will have legs and recover quicker than we think. The NASDAQ needs to go up to that 4,900 level. That was where it reversed off on that Fed meeting day. Pretty much crashed from there, but it did get above its 4,800 level, which was an important level. So we're looking to see if the NASDAQ can get above that 4,900 level. So again, getting back to the sectors, we still continue to see strength in the financial sector and the building sector, consumer discretionary sectors. Those are some of your stronger sectors out there right now. And as we look for strength, one of the stocks I think is worth focusing on is called Total System Services. The symbol is TSS. It's pretty much of a steady eddy. It's in the financial payment and processing sector. They provide services to financial and non-financial institutions, meaning governments, retailers, small businesses, and banks. And they pretty much, the last 3 quarters, their earnings have averaged at about 30%. Revenues have increased 9, 12, and 15% over the last 3 quarters. Estimates going forward, analysts are looking for a 17% increase in earnings for 2015 and a 10% increase in earnings in 2016. Mutual funds have been accumulating the stock pretty well over the last few quarters. Now, here's what happened. In October, it peaked at about in August, peaked at 48.67, corrected since then, went down to that little bit below the 43 area. That's its support area. And last Friday, it was breaking out past the $48 pivot point. It's above that level now, so it's at the pivot. It's viable here at this place if this is a trade for you. You can chase it up to about the $50 level, no further than that, because that would be about 5% above that pivot point. And of course, if the stock were to fall below the 43 level, might not be the right trade at this time, or it might not be the right trade for you. So as always, consult your financial advisor if this trade is for you, but it's a stock that's showing good relative strength. It's in the right sector, in the right group. Other stocks in that group are Heartland Payment, Global Payment, Euronet, Visa. So pretty good industry group to be in as well. But as always, price and volume be your guide. This is George Kachuk for RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week, and if you're celebrating Columbus Day, have a great day.